World's second largest economy, China's economy is slowing down. China's GDP, gross domestic product, stands at $19 trillion, only second to the United States. But lately, there has been telltale signs, six signs that China's economy is having problem, and there's been showing red flags that economy is slowing down and China is having problem. So we are going to discuss what are the six signals, six flags pointing to that China's economy is slowing down. The first thing is gross domestic products. China's GDP slowed down to only 0.8% in the last quarter from 2.2% in the first quarter of 2023. If you look at this graph, that China is to grow at 19% for a long period of time after that Deng Xiaoping had liberalized Chinese economy in 1978. Since then, it has been growing consistently, and that is how their GDP became multiple times and came up to world's second largest economy. Since 2022, it is growing over 10%, but after COVID lockdown, the economy basically slowed down to 0%, almost became negative, and since then they have been struggling. United States economy also slowed down, but it bounced back after COVID was we got over the COVIDs. But in China, they had continuous lockdowns, and they are having problems, COVID problems, and their GDP hasn't grown much. The second sign is their exports. China is an export-oriented economy. Their economy is slowed down because of this pandemic. It has threatened by weaker global demand, as a result of which the growth halted to 3-year low. If you see in this graph that it's in a negative zone. So globally, because of pandemic, the demand has been less, and China also has been suffering because of their exports. The third thing is the consumer price index in a deflationary mode. Their consumer price is, instead of positive, they're having negative price increases. So it moved to a deflationary territory in the first time since 2022, since the lockdown started. Currently their consumer price CPI, consumer price index, is below 0%, whereas in the United States we used to have CPI going up all the way to 9%, and currently it has come down to some extent to 3-4% level. But in the Chinese economy, it was basically up to around 5% in 2020, then coming down, bounced back a little bit, and reached up to 2%. But last couple of quarters, it's gone down all the way below -%. Another very important is the unemployment, youth unemployment. China's unemployment has been going up to very worrisome 21.3%, the latest unemployment. In fact, Chinese government, they have basically stopped publishing this kind of unemployment number, thinking there could be some kind of unrest if not too many young people are employed. In fact, they go for their Chinese young people, they are looking for jobs and not able to find jobs, so they have staying at home and trying to help their parents and earn some money instead of unable to get jobs. And their government is basically encouraging people to go to take blue collar jobs, where people are they have graduates, but they are not very happy that they have to take up blue collar jobs. So there has been a lot of challenges in their Chinese economy in terms of unemployment. Another red flag is Chinese currency, yuan. It has been going down. It's basically hit a 16-year low currently. If you look at the graph here from the left side, currently basically it has hit an all-time low. The currency conversion from US dollar to Chinese yuan, it has reached a 16-year low. Other thing is new loans. It's been very difficult to get loans in China, so the borrowers having problems. The new banks loan issuance has come down to from 3.05 trillion in June to come to a staggering halt, slow down to only 346 billion in the month of July. So almost like 10 times, from 3.03 trillion in month of June to 346 billion only in the month of July. So hitting low since it did not happen this low since 2009. So with this, the borrowers not able to get loans, they are not able to expand their business. So economy is going to slow down tremendously. So they are also having problem in their real estate areas. I think since basically like their Country Garden, one of their main investors, they have been unable to pay their debt payment, the coupon payments first time. And last month, I think, one of their Chinese real estate builder, they basically had announced for defaults. So they have built up a lot of real estates, but the prices have been declining, and that is creating a lot of tension and and anxiety to people because they always used to make good money investing in real estate sector. And with the real estate sector is becoming unstable, people have been feeling the Chinese people generally getting scared basically with their finances and what is going to happen next. So with this Chinese economy, if it doesn't bounce back, potentially there could be spiraling effect to other global economies. It remains to be seen. Currently Chinese government, they haven't taken any positive action. Might have some interest rate cuts, but they haven't done any kind of giving any packages like the way they used to give $5 trillion in previous economic slowdown period. But at this current time, they haven't really shown any kind of initiatives from the government side to do any kind of any boost to speed up the economy. So this is what hope you like this video. If you like, please do subscribe it and give your comments. I would appreciate it. Thank you very much. Have a nice day.